I want to start with this question of what is the scope for monetary policy right now in the face of these renewed lockdowns in Manila? It may hit growth. It may be a drag on growth, large or small, we don't know. But if it is, if you see more need for stimulus, and what if the government attempts to sort of, put on price caps and rein in inflation a bit, if those work? Is there room for the BSP to ease more, or do you think you're at the end of the easing cycle for sure?
First of all, at the start of the crisis, last year we unleashed something like more than 2 trillion pesos worth of measures. That's equivalent to about $41.2 billion, and we cut policy rates, we cut the reserve requirement, we adopted regulatory relief measures meant to increase the capacity of banks to support small, medium, and enterprises and vulnerable businesses. And I think there's enough liquidity in the system, and that still has to be digested by the financial system. So where we are right now is that we feel that our current monetary policy stance is still appropriate for the recovery. So I don't think there will be any drastic moves on our part to inject more liquidity into the system. Our inflation is a little bit high this year, but we are confident that it will be within the 2 to 4% target range. And so we don't see any significant move on the part of the monetary board.
Mm-hmm.
We feel that it's more the job of the executive department, of course, and the health authorities to address the current crisis.
I'm curious though, when you look at, say, the first quarter, when you look at this year's GDP, how much of a cut from growth do you expect from these lockdowns and the fact that virus cases are rising in the Philippines, the vaccine rollout's going very slowly?
Well, before the 2-week lockdown, which is still ongoing, we anticipate or we project that the economy will grow by 6.5 to 7.5% this year. And in fact, the IMF recently adjusted their growth target for the Philippines, or growth projection for the Philippines, from 6.5 to 6.9. So, but now because of the 2-week lockdown in Manila and the adjacent provinces, that's approximately half of the economy. Our planning secretary is projecting that would result to maybe 0.8% cut from our original forecast. So we will probably be looking now at around 6 to 7% growth. That's where the IMF's 6.9% growth projection will fit in. And of course, the economic managers will meet this month to reassess where we are at the moment. And so my guess is that the economy can still grow at around between 6 to 7% this year.
Well, so with all that, even with these lockdowns, it sounds pretty optimistic. Do you think there's a need for more fiscal stimulus?
I think there's still need for some fiscal stimulus. I think, for example, we need to take care of the poor and the vulnerable who are affected by the lockdowns. Looking globally, I think you will agree with me, imposing lockdowns is kind of difficult for democracies. Look at US, look at Germany, look at the UK, right? But in the Philippines, we kind of succeeded and the Filipino people are disciplined and they follow the lockdown. And so we are looking at the metric. To me, the right metric in this pandemic is the death per 100,000 people, and I think that the Philippines did well in that metric.
If you're not prepared to use rates again, or don't think you're going to need to, what about other monetary policy tools you could employ to support the recovery?
As I said, I think the the current monetary policy we have adopted, we cut, for example, last year about 200 basis points in interest payment,
Okay.
rather in interest rate. The current rate now is 2%. That's the lowest ever in this country. And we cut the reserve requirement from, when I assume office, around 18%, now down to 12%, and with a special accommodation for small, medium enterprises. So I think that's still appropriate at this time. And so we are looking at the fiscal and I said health authorities to do the job.
So have you approved the government's request to extend the no-interest loan that was authorized, I guess it was back in December?
Yes, they are right now, we have a repo arrangement with them, some 540 billion pesos. That's approximately $11 billion. And we have acted on it. They have requested for renewal. And we feel that the national government need this assistance from the VSP, and we're fortunate that under the revised charter of the Central Bank of the Philippines, we're really allowed to lend and to the government in extraordinary times, and these are extraordinary times.
You know, the IMF is warning this week, and I think there's been a lot of talk about this, that abrupt Fed rate hikes or a sudden move to be less accommodative. We didn't get that from the FOMC minutes, but people are still watching very closely, that this could hurt emerging markets like the Philippines because of capital outflows, rising bond yields, et cetera. Is this a concern you share?
I think it's a wrong interpretation that when you talk of emerging economies, the rise in the 10-year bond treasury bond rate in the U.S. will affect all emerging economies. I think we are in a different position. We have our debt to GDP ratio is still comfortable. I think you talked to Secretary Dominguez yesterday.
Yes, 2 days ago.
It's when the crisis started, our debt to GDP ratio was in the neighborhood of less than 40%. Pretty good compared to other emerging economies and even compared to other developed economies. So right now, I think we are somewhere in the neighborhood of 55%.
I want to ask you.
So we're okay. We're okay.
All right. Well, okay. This makes sense. How are you factoring in the strong recovery in the U.S. and China? How are you factoring that into your forecast, for example, for your trade balance, for exports, for growth, as you try to get the economy on its stronger path again?
I think we'll benefit from the strong recovery of both the U.S. and China, because our the top three trading partners of the Philippines are China, U.S., Japan. So any improvement in the economies of our trading partners will be beneficial to us. And we see, for example, exports will grow by 8% next year, and 12%, rather exports will grow by 8% and imports will grow by 12%. And that's, to me, that's necessary for our recovery efforts.
I want to get back, just one final question about inflation expectations, because central bankers around the world are watching these very closely. In the Philippines, in the U.S., are you at all concerned that if you go through even what is a temporary increase in inflation above the target, that this could unsettle inflation expectations, that this could be a lasting effect of maintaining this policy and not hiking rates because you probably don't think it's the right thing for the economy right now and you don't think it's necessary to fight inflation?
That's a good question. You know, the Philippines has a long history of inflation targeting, and we have the credibility. And in fact, the inflation expectations right now of the private sector remains well anchored, and so we're not worried about the change or the mood in inflation expectations of the private sector. It's really because they have confidence in the Central Bank of the Philippines.